the Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Dave Howard. And David is a tax attorney with Hoag Fenton, Jones & Appel in San Jose. He has been both a lawyer and a CPA for over 40 years, only yesterday, and has now become an inactive CPA because he retired from Deloitte, where he had been a tax partner for over 20 years. At Deloitte, he developed tax strategies for multinational corporations, Silicon Valley startups, family corporations, corporate executives, and wealthy individuals. And I can tell you, I've known David for a long time, and whenever I used to call him over there, it seemed like he was over in Geneva. Anyway, his former clients encouraged him to return to practice, and so now he's practicing law with Hoag Fenton. He's taught extensively, including for the California CPA Society, New York University Tax Institute, San Jose State Masters in Taxation programs, and many more. And lately, actually for the last 3 or 4 years, I guess, David has been working on helping his clients get in compliance with information reporting requirements for offshore financial accounts, trusts, and gifts from foreign sources on the applicable forms, the Foreign Bank Account Form, Form 89, 38, 35, 20. We're going to talk about these weird forms. And then he deals with many well-meaning individuals who for some reason have not filed these forms on time and are now faced with very large potential penalties. So David, thank you for joining me today.
Sure.
Okay, so we're just going to be hitting some highlights here, but really talking about dealing with the interests of people who have these foreign assets and they haven't been properly reported, and so now what do they do? And so, David, are there different approaches depending on whether the IRS knows about the account or not, or what do you do?
Yes, in fact, that's really critical. If the IRS knows already that you have an undisclosed foreign bank account, there's one strategy to follow. And if they don't know yet, then there's another strategy, another path to go down. And so I don't know which one you'd like to discuss first, but you'd probably like to know a little bit about both.
Right.
And, I'll go down either path for you briefly.
Well, why don't you start with if they don't, because an awful lot of people, they really don't. Right.
Well, that's probably my most typical client. I get a panicky call from somebody, and they come see me and they say, I just took over, my father passed away, and I just was doing his estate, bringing his affairs in order, and lo and behold, he has a savings account in India that he's never disclosed to the IRS. And or just a dozen other ways that this stuff will show up. And so, well, the first question that I have is, well, how big of an account is it? If it's not a real big, if it's a $10,000 account, it should have been disclosed. How much income was being earned on it? How much unpaid U.S. income taxes are involved? And frankly, in smaller cases, and small, it can be actually pretty big. It could be $100,000, it could be a $200,000 account. It may be a good time to start in complete compliance, as opposed to trying to fall on your sword and try to make everything right. Now, there are procedures, and which we'll talk about that in just another second, whereby you can get yourself completely up to snuff if you qualify under certain disclosure programs. And then finally, there is a voluntary disclosure program that's ongoing. It doesn't have an end point. Whereas if you will step up and disclose, file all your disclosures, then you will have a cap on the penalties. They'll probably back off on a potential criminal prosecution and so forth. So the question is the deed of such gravity that you do need to go into some kind of a foreign disclosure program, or is it one of these where you could just start doing it right? And the factors will depend on a whole bunch of things. For instance, if there are some people who have always picked up their worldwide taxable income, but they didn't know that there were additional disclosures requirement that there are these additional forms that you should have filed. And one of them is what we call the FBAR, which is the Foreign Bank Account
report. Yeah.
report. And that's actually the abbreviation. It's
right.
some TDF 90.20- something or other, complicated. But if you haven't been filing that, if your foreign bank account's add up to over $10,000, there's a program right now, in addition to the voluntary disclosure program, it says that if you paid all your taxes, but you just didn't file your FBARs, you should now file 6 years of FBARs under this particular program. And it's actually disclosed in the FAQs, the frequently asked questions, that go along with the voluntary disclosure program, and it's FAQ 17. And it says, so you indicate that you're filing under FAQ 17, and you can file all your prior years, well, they want 6 of the prior FBARs that haven't been filed. And you can now file these electronically. So you go on. These FBARs used to be difficult to file because you had to arrive physically in the offices of the IRS, wherever it was. I can't remember, Detroit or Philadelphia, someplace, on or before the 30th of June every year. And people always come down the last minute. And this is not one where you just could post it and have the postmark on it. You actually had to get it in. So
timely filed and timely received or whatever. That doesn't work here.
Yeah, right. Not with the FBARs. And also the FBAR, this foreign bank account disclosure, is not even part of the Internal Revenue Code. It's under the Treasury rules on banking. And the law was designed to uncover accounts where people may not have been paying their income tax. And it was really to get the income tax. So if you're paying your income tax, you're in compliance. You just didn't disclose. And there's no tax due with it, but there is a $10,000 penalty for not filing one of these things. If you knew that you should have, you're going to have that penalty imposed. And if you're actually trying to get away with something, now that's another thing. The IRS hasn't caught you, but you knew you should be doing it. That's when you may want to go into the real big, full-blown voluntary disclosure. And in that one, it allows you to cap your damage, so to speak. You have to file your prior year's tax returns, pay all your income taxes, plus penalties, plus interest. Once you've done that, then you file the FBARs, and they only impose a penalty. Of course, what they've done is kind of a matter of policy. If you have not been filing your FBARs and you knew you should have, they want 50% of the highest balance over the prior 6 years as a penalty. That's not income tax. You have to pay the tax as well, but you lose that part of the account, and your investments may have gone down. So what you want to do is do in the voluntary program, it's only 27.5%, much less than 50. It's still a lot of money. Plus the forms will get you. And then, so if you have that feeling that they may be after you, and you've really, also there are other forms that you should have been filing.
We'll get there in a minute. We're sort of wandering along.
Yeah, I'm sorry. It's go on
okay.
and on. You can
just
stop me whenever you want.
That's okay, Dave. So, well, first of all, I wanted to mention to folks, so the FAQs that he's talking about, these are actually listed at the IRS's website. And so they're like questions and answers related to foreign bank accounts. And if you may want to actually get help related to this, again, from a tax professional, particularly that's familiar with that. All right, well, let's talk about the situation just briefly again. What if the IRS is aware? Now, how do they become aware? And maybe you can talk a little bit about, because that's sort of how this all came up.
Right. Well, a couple of things. First of all, there was a whistleblower with respect to Union Bank of Switzerland, and this fellow who had been working for Union Bank of Switzerland notified the IRS that, boy, the UBS is up to some no good. They're going out and they're actually getting Americans to invest, put their money into programs where they don't disclose the ownership, and they would have them, let's say, form a trust in some offshore, let's say Bermuda, form a trust. And in Bermuda, the trustee of a trust can just declare a trust. And then the trust forms a corporation. And then now that trust that owns a corporation, that corporation then receives the funds that the U.S. person would transfer over. Now, if the U.S. person created the trust or owned the corporation, he'd have to disclose all that interest. But they were reading the law and saying, well, he didn't declare the trust or form the corporation, and they were putting a lot of money into these accounts, not disclosing it, not paying their taxes, and apparently there were billions of dollars in these programs. Mm-hmm. This, the whistleblower brought up, and the U.S. government was very upset with the Swiss banks for doing this. And of course, this was, if you recall your history, UBS bought Payne Weber, a big U.S. investment management firm, and UBS was going after the Payne Weber customers that had a lot of money and suggesting these strategies. Mm-hmm. And they decided to go after the Bank Secrecy Act laws in Switzerland and force Union Bank of Switzerland to disclose the accounts that they were holding, but they limited it to just accounts over $1 million. Mm-hmm. And so once they broke they really twisted the arm of the Swiss government. They changed their law briefly for this. There was an $800 million fine imposed on Union Bank of Switzerland, and 4,500 names were disclosed. Now, a similar thing happened with Credit Suisse. Now, the Department of Justice has gone back into Switzerland and has made a deal with all the other banks, and they're getting the names of the people. But what they've done is they've now created a little, in fact, this occurred in the first situation too, a little bit of a safe haven, an opportunity for people where the foreign bank will write you a letter and say, the IRS is on to us, in essence. We're going to have to turn all your information over, but if you act quickly, you can go into the voluntary disclosure program. And so the IRS doesn't yet know about you, and so now you can slide in. That's a good time to really consider your options. And that's when you, let me pause there.
Yeah, well, I'll just say, you want to be sure to look at your mail. There's a lot of people, you know, that it seems like the mail comes in, especially some of these people we're talking about, that, they're very busy people, and so, you know, they may be traveling all over the world. Yeah. They've got a letter here, and if nobody's looking, then they may not be able to take action in time.
And that's happening right now, by the way, under this new Department of Justice program. You're getting contacted by the banks. All the banks in Switzerland are having to scrutinize whether or not they have U.S. customers.
So what do you do if the IRS knows?
Well, what happens, if the IRS knows, you'll find out about it when you apply for the voluntary disclosure program. If you go into the voluntary disclosure program, you have to get permission to go into it, and they will check to see if they have a file open on you already, and you'll get a little note back that says you can't do voluntary disclosure. We're after you. So now, I'll tell you what they're going to want to do and what they will do as a result of that. What they're going to want to do is know that they will come out and see you. Don't worry about it. They might just open up an audit of some year back that would be covered by the program, maybe 08. They might start out just with gentle things. They want to know who you are and what you're up to. They want to know what kind of a character you are, what kind of a person, what you're doing, how simple you are, how sophisticated you are. They're going to want to ultimately know, where did this money come from? How did this pot of money get there? Were you an arms dealer, a terrorist, money launderer? How did the money get formed there? Did you transfer it over there? Did you inherit it? And frankly, most people have quite innocently put money there, but it could be from some corrupt and evil practice. They'll want to know where it came from. Then they'll want to know, why haven't you been reporting it? And they will want you to file income tax returns for all open years. Now there's a 3-year statute of limitation and a 6, and they'll want you to file all your tax returns. They'll want you to file 6 years of FBARs of these disclosures. And what they're going to do is, if you have paid all your income tax, and you're not in the voluntary program, if you will file all the amended tax returns, pay all the tax, on top of that add a 20% penalty plus interest from when it was due. If you pay all that, now they step back and look at, why didn't you disclose this on your FBAR? This is with this course of the audit. Did anybody ever tell you should file the FBAR? Did you talk to your CPA about it? What did he tell you to do? Why didn't you file this FBAR? Why didn't you report it? And if you honestly, if you can convince them that you didn't know that you had to file it, or that somebody advised you didn't have to do it, and it was non-willful, then the penalty will be capped at $10,000 a year. Otherwise, they can go up to 50% of the highest balance if they think it's a willful failure to file. So they're going to want all the taxes, and they're going to want to know if you had heard about the voluntary program. Why didn't you go into it? Why didn't you do that? And so it's kind of surprising, the questions. You do not have to answer the questions if they're going to incriminate you, but if you choose to talk to them, you have to tell the truth. Mm-hmm. And it's a bit of a challenge. It's kind of scary. Mm-hmm. And so I always go along with my clients. I tell them what the questions are going to be so that they're not caught by surprise. But and also I don't really deal with criminals. I deal with people who have just inadvertently kind of gotten into this, or mm-hmm. maybe they thought they're getting away with something, but they're not big time cheaters. And yeah. So it's a little easier.
When you and I were talking about this before, you mentioned that some tax return preparers get kind of defensive about this stuff, and maybe that's not the best action to take. So maybe you can talk about that a little bit.
Well, they will. The IRS always has the power to issue a summons in connection with an IRS audit, and the summons says, if you're a holder of records or have information related to the income taxes of so-and-so, you have to deliver them forward. And most often that's used with the bank. And they'll say, bank, here's a summons. Please send over all the banking records related to this person over the last whatever number of years that they're examining. Well, they can also issue a summons to a CPA. In fact, CPAs get these frequently, saying, we want you to bring forward the books and records of a certain company. They can also ask you to come in and be interviewed. Well, I've had some CPAs for my clients become really terrified of what's going to happen, become quite defensive, because they're afraid that they're somehow going to fault that CPA. And that's not really their agenda. Their agenda is to find out whether or not the client had disclosed to him that he had the foreign bank accounts and what kind of advice that he had given the client. And frankly, if he just made a mistake and advise the guy, I don't think you have to file, because I've looked at your paperwork, and based on what the bank tells you, this is something you don't have to report. And by the way, the bank did issue documents that said that. So here the guy says, I don't think you have to file. That's reasonable cause for your client. That gets the client off the hook, and the penalty's waived. They're not after you for malpractice. That CPA was wrong. You mm-hmm. did have to file. But mm-hmm. they're not trying to pin him against the wall. They want to know what he knew and what advice he'd given his client. And I've had CPAs kind of, that's privileged communication. Well, CPAs don't have privilege with respect to that and that kind of information. And they become kind of furtive and suspicious, acting, and that doesn't help their client at all.
No. So maybe you already covered this, but just in case, why don't you talk for a moment about the low-risk taxpayer voluntary disclosure program?
Sure, I would like to say that. And also, I should mention, too, that it's not just not paying your taxes and not using the FBAR disclosure. There are several other disclosure forms that should have been filed, too, and maybe run through those. But they do have, there are people, I've had, this is a real common one I've seen, is somebody comes in and says, Dave, you know, I forgot. I used to live in Canada, and I have an account, a retirement account in Canada. It's like a 401k plan here. Those are taxable in the United States if you're a U.S. resident. And the guy says, I've never reported that. What should I do? Am I going to go to jail? I said, well, how much taxable income do you underreport? And you look back, and it's not a lot. And there's a special program for they call them low-risk taxpayers. If you went back and amended the return, picked up that additional income, and your total additional tax were $1,500 or less, they let you off the hook on the disclosure penalties. Mm-hmm. They do want you to file the amended returns, pay your tax, file 6 years of FBARs, they'll waive the penalty on the FBAR. And that's really helpful to you. And then also, now maybe I'll go into some of these other disclosure forms too, because there's FAQ 18 in addition to FAQ 17. I don't know if you're going to ask me that, but you would want to ask me about it.
Okay. Go ahead.
And that is, in addition to filing an FBAR, the foreign bank account disclosure, if you happen to own, with 5 or fewer U.S. persons control 50% or more of a foreign corporation through a trust or whatever, they have to report the income of that corporation on the Form 5471. And there's a $10,000 penalty for not reporting that. There's also, if you receive a gift from somebody, from a foreign person, and that gift's over $100,000 in any one year, you have to file that form. There's a $10,000 penalty plus up to 35% of the balance of the gift. Otherwise, there is no tax on a gift from a foreign person. There are other forms similar to that, if you have a foreign trust. And in fact, that's not an unusual situation to have somebody set up a foreign trust that owns a corporation. That foreign trust has to file a U.S. tax form. It's a 3520-A. So if all of a sudden, and I have a client right now who had, whose parents long ago set up a foreign trust that set up a corporation that had a bank account, and none of this had been disclosed. Now, had they owed taxes on these, the penalties for failure to all these disclosures, it might have very well been worth it to go in the voluntary program. But this person had always reported all their taxable income, and actually they had lost money in this for the last who knows how long. And so when there's no underreported income taxes, you're allowed under FAQ 18 to file the old 3520-A, that's the tax return on a trust, the 5471, the disclosure of the foreign corporation, as well as the FBAR, the report of the foreign account, all without penalties on amended returns. That's really helpful. Then, if you haven't done the FBAR, then you go back to FAQ 17, and you can just come in home free if you have not underreported your taxable income.
Maybe you can talk for a moment about the questions on Schedule B.
Oh, you're right. That also, too, is important. Nowadays, on your 1040, on Schedule B, that's where you report your interest or your dividend income. Right at the bottom, it says down here, do you have a foreign bank account? What country is it in? Was the balance more than $10,000? Oh, and by the way, with your 1040, this is 8938, which I forgot to mention. If you haven't been filing one of those, there's a $10,000 penalty. And so if you've fully been paying your taxes, you also use FAQ 18 to pick up your 8938. But that Schedule B box, you're supposed to disclose your foreign bank accounts, and they will also jog your memory that you should also be filing these other forms. Now they do. And that's another question that the IRS will interview you about when they catch you before you go in. Say, why didn't you complete the little box down at the bottom of Schedule B? And then also, almost every CPA, when he sends out his questionnaire every year, says, do you have any foreign bank accounts? Tell me about them. Well, didn't you read that instruction your CPA sent out? They ask you all these things. Yeah. They want to know why you didn't fill it out.
And that's why they don't fill it out. Yeah, okay. So maybe you can tell us a little bit about what FATCA is and what happens with this FATCA in 2014.
Well, the FATCA, which if they just add a T on the end, it would be Fat Cat, but it came through in 2010 in March. I think it was a Full Employment Act or something. But this was included the FATCA Act, which was this was in response to the Union Bank of Switzerland scandal and so forth. They say the United States, if you can imagine, said, okay, all you foreign banks in the world, if you accept a U.S. taxpayer as a client, you have to get their taxpayer identification information and issue a 1099 to them, telling them the income that they have to report in the United States, and you got to send a copy of that 1099 to the United States, to the IRS. So we know to go after these people, make sure they pay their tax. Well, there's an outrage all around the world, right? The banks say, well, you can't make laws like that and impose them on us. Well, we can, and we do. And it's working out. So that starting in 2014, the banks need to gather the correct information, which you supply, if you're the depositor, on a form W-9, and all it is your name, address, and your taxpayer ID number. And they will then, they'll be required to file a 1099 and disclose the accounts over. So that FATCA is actually being implemented, it's the whole idea is to keep people from cheating by depositing their funds in a bank that doesn't otherwise disclose. And so they're just making everybody disclose. So when you see all those Bourne Identity movies, all these movies about your secret bank accounts in Switzerland and stuff, they're trying to get rid of that.
Not secret anymore.
No.
Maybe at one time, but
Yeah, right.
those days are changing.
Right.
So maybe you'd like to review for just a moment some of the penalties that we're talking about here.
Well, in addition to when they come after you, I didn't mention this too, is that if the bank has put you into certain investments, like a mutual fund that doesn't distribute its earnings every year, they will come in and call that a PFIC, which is a passive foreign investment company. And there are all kinds of penalties and charges for not having reported that properly. And the IRS has finally created a little model where they do the computation for you. It's awful. So you got the PFIC penalty. You've got to pay all your taxes. You have the 20% penalty for not having reported it properly. That's negligence. Plus the interest you're going to pay on that. That's on the income tax side. Then there is the not filing the disclosure forms. If you have the 3520, it could be $10,000 each, up to on the gift up to 35%. And by the way, if you have a gift from a foreign corporation or foreign partnership, you also have to over $14,000 you have to disclose. And finally, on an FBAR up to 50% of the highest balance. So you wind up paying a lot of penalties on this thing.
One thing I'll mention is, as I recall, there's some penalties that apply if you don't respond when the IRS sends you a letter. So we're all out of time, Dave.
Wow, went fast, but there's a lot to worry about.
Yeah, there really is. So I'll just say thank you for joining me.
Sure.
And we're going to do another interview, but thank you very much. And folks, I hope we've given you some things to help along the way, particularly if you haven't reported this in the past or you know somebody that hasn't. Get help, and we'll see you next time on Financial Insider Weekly.